To build anything that truly lasts, it takes time.
Hello and welcome. You tune into News Now with me, Ankita Saxena. And well, as of now, breaking is on the earnings front is Paytm that has come out with its Q1 numbers. Let's take a look at the numbers then. As far as the revenue is concerned, that is up 28% on a year-on-year basis. That's coming at 1,918 crores versus 1,502 crores on a year-on-year basis. The PAT is at 123 crores versus 840 crores loss that we saw on a year-on-year basis, and the EBITDA stands at 72 crores versus a loss of 792 crores on a year-on-year basis. So these are the numbers that we have right now. In fact, it's a beat coming in because look at the estimates. Let's open the estimates and check. As far as the revenue is concerned, we had the Motilal Oswal come out with its estimate. It was estimating a revenue from operations of 26% uptick coming in. We are seeing an uptick of 28%. They were expecting a modest profit growth of 2 odd crores, but we are seeing a growth of almost 123 crores versus a loss of 840 crores on a year-on-year basis. But let's get on board Rahul Jain, who's the Director Research of Daulat Capital, who's joining us to weigh in on the numbers. Hi Rahul, thank you so much for joining us today.
Yeah,
Rahul,
hi.
the numbers have just broken for Paytm and there is a huge swing in the profit. We were expecting a very modest profit of 2 odd crores, and this is a big upside surprise of 123 odd crores coming in. As far as the profit front is concerned, there's a beat coming in on the revenue front also. Tell us, what's your view of the first cut of the numbers?
Yeah, I think revenue are built on all factor possible, and there is an element of cost saving and right mix of the revenue stream, which has led to the improvement in the profitability even ahead of what we were anticipating. If you see the fine prints, there is a increased exposure from non-DLG portfolio within the financial services business, which actually drives the profitability even higher, which could also have led to some part of beat. There is a significant reduction in the ESOP charges, and while the revenues have remained steady. So some of these factors have actually supported the beat even to our estimate, although our estimate was slightly higher than the number that you read for the some other broker.
All right. Also, Rahul, tell us, how do you expect the stock to react in tomorrow's trading session, given that Paytm has run up quite a bit, after that sharp correction that we saw. It has run up almost 25% in the last 6 months, and almost 132 odd percent in the last 1 year. How do you see the investors to react to these results tomorrow?
Yeah, I would not like to comment on one day movement as such. But if you look at it, generally the stock gets significant re-rating at the cusp when the business turned profitable from a loss making. As you could see, this is that quarter when the loss making business have turned into meaningfully profitable business, and the current quarter profit is probably one of the highest among the internet names. So to that extent, there's a big gap of re-rating that could happen in this name. But of course, they have to consistently execute on it, and that is how the re-rating should play out over a period of time.
Also, as the numbers are trickling in, as we're getting in more information, it says that merchant payment metrics have rebounded, and we also see consumer metrics that are stable. But the business continues to suffer from recent operational disruptions and regulatory changes. But the management is really expecting some improvement in the subsequent quarters as far as the merchant activity recovery is concerned. By when can we see that recovery coming in, and therefore when can we see some sort of an improvement on that front?
Yeah, on the merchant side of the business, we have seen for last 3, 4 quarter, things have been improving consistently, and it has shown more resilience than the consumer side of it. If you look at the current landscape of monetization, since the regulatory action, Paytm has not been able to operate their wallet business. and also there is on the BNPL business. And we have also seen that the MDR on UPI is a long overhang. So some of these things, when it plays down, probably that is the time we would see a much better traction on the consumer side of the business. Meanwhile, merchant side of the business would continue to drive the business momentum.
Also, Rahul, finally, merchant activity and platform resilience seem to be encouraging, but investors are really waiting and watching out for sustained profitability and clarity on the regulatory issues. When can we see some sort of a clarity coming in as far as the regulatory front is concerned?
See, I think at this moment, the way the business is operating, it is called as TPAP, which is like third party application provider. So this kind of a business structure is far less regulatory by nature versus a payment banking license they used to have initially. So I would say there is no regulatory overhang in the business anymore. Rather, the challenges which are there left in the business would actually act as an upside potential to the business, and that is what is going to be an increased optionality to the revenue upside. Current momentum on the business, don't see much risk from a regulatory overhang.
All right, Rahul, thank you so much for taking the time out and weighing in on the numbers for Paytm. Paytm that is giving an upside surprise on the revenue front as well as the profitability front. It's a wait and watch as to how the investors react to the stock tomorrow in tomorrow's trading session.